Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Amidst the lack of any significant data, markets have been focusing on the geopolitical escalations. Now, the Russia Ukraine conflict, which has been going on since 2022, had the world worried once again after Ukraine used American and British missiles to hit Russian territories. The Russian side claims it's a significant escalation, and the word nuclear has been floating around since then, also keeping the safe haven assets bid. Good morning, JK. It seems suddenly Trump trades have taken a backseat to geopolitics. So, what's your thought?
Hey, good morning, Suraj. Yes, geopolitical escalation has overshadowed everything else in the last 2 days. In fact, after the US election, when Mr. Trump has been re-elected, markets had been quite relaxed on at least on the Ukraine side of the geopolitics, because Mr. Trump was expected to achieve ceasefire in the war and that the war would end. That was the expectation. Hence, in that context, this has come as a rude shock to the market, definitely. And, you know, particularly after Mr. Biden authorized Ukraine to use the long-range missiles inside Russia for the first time, and which, of course, they were saying were in response to the uh, North Korean troops being lined up on the Russian border. So the Ukraine army did use these long-range missiles, apart from using missiles of UK, and that has given rise to Russia responding, pointing out to their, lowering of the nuclear doctrine, which means that, the there can be use of nuclear weapons under certain circumstances, particularly if another nuclear power is directly supporting a war. And they are pointing to the fact that with American troops helping these launch of these missiles, America is directly involved. So that is what they are contending. So it's a really big escalation in the war. Now, the situation is that on the American side, they've actually said that they are closing down their embassy in Ukraine, and their staff have been asked to leave, and pointing to possibility of significant air attacks. On the other side, Putin has actually offered for a ceasefire to Mr. Trump. Of course, his conditions are very tough to achieve because he doesn't want Ukraine to seek a NATO membership. This is a situation which is not likely to get resolved very soon, until probably Mr. Trump himself takes charge, and and there's quite some time for that. So markets are definitely on jittery side, quite on the safe trades everywhere. Even the yields did react lower after these escalations. We did have some economic data yesterday, but they were somewhat, overshadowed, as I said, by the geopolitical situation. We had inflation number in UK, which came, above the 2%. Of their target, coming at 2.3% in October, a significant leap from 1.7%. Even the core inflation was 0.1% up. Services side inflation was slightly higher, and more so, the inflation in the coming months is expected to go inch even higher, because the subsidies which the government had offered on fuel prices has actually been reduced in the budget, and many of the proposals in the budget are also leading to inflationary impact. So UK's rate cut prospects have dimmed for December. And in fact, there is another inflation report from Canada also, which also came higher than expected at 2%. So Canada, instead of 0.5%, maybe they will go for 0.25% rate cut in December. And then we also had, the report from the Bureau of Labor Statistics, which actually showed that even after discounting for loss of jobs due to hurricanes and also strike at Ford factory. The number of jobs created in October was far less, around 100,000 only, and it seems to be a view emerging that in the core, the job market in US is definitely weaker. But that has not changed the prospects of a rate cut by Fed in the coming month, because now it's quite almost evenly balanced, just above 50% probability of a cut of 0.25%. All the Fed members, from their speeches, it appears that they are uh, like us, looking forward to the policy statements from the new administration and what impact it would have on the inflation course. Therefore, there is a lot of uncertainty as far as Fed policy is concerned, adding to the uncertainty on the geopolitics. If you look at the treasuries, they have been well capped at 4.50 for 10-year and 4.40 for 2-year. It looks likely that in the current circumstances, the demand will overtake the supplies. Although yesterday there was a poor response to a 20-year bond issuances. Stocks have been so far unmoved enough for the geopolitical escalations. Liquidity still supporting. Market is still pricing in the tax cuts and the deregulations. But I guess going forward, as we head into end of the year, we will see some profit taking take hold, and we are almost done with the earnings report, except one of the largest tech companies, that is in Nvidia's results, which is being now priced in, and stocks are also headed for probably a good correction, and that can also support the treasuries. Now, on the currency side, the dollar index has moved once again towards 107. After trying to correct itself for the steep fall that we have seen in the last 2 months. But it's interestingly, it is still holding below 107. In fact, it's surprising that even euro, despite all the challenges that it has, which has increased after escalation in the geopolitics in the Ukraine region, is still holding above 1.05. Some of the commodity currencies are also holding up well. I think dollar continues to be in the range. Perhaps a slight bias towards the upside still, but that requires a larger trigger for it to really move, surge higher. So we continue with this range, but the real mover has been gold, which has gained about 5% from the low seat as it at 2,536, and now it's trading about 2,550, 2,650 actually. The safe havens are in play, but again, yen, which initially played as a safe haven, has actually been on the weaker side. On the rupee, the holiday thinned, ahead of the holiday, rupee was in a very narrow range on Tuesday, and not much reaction to the swings in the dollar index that we have seen so far. But interestingly, we are seeing some slowdown in the FI outflows, and we have heard some brokerages also calling for shifting back of their focus on India and increasing the weightages. But yes, I think technically the equity indices in India look still a bit more down, maybe in the short term, but possibly as we near the December month, I think this correction might be over, and I think India may still continue to be the preferred destination. But whether that helps the rupee or not, very unlikely, because even if we do see return of inflows, very much likely that RBI will be there to absorb those flows. So rupee continues to be in the range with a slight upward bias for the time being. Thank you.
Thank you, JK. And just quickly summarizing, you covered the geopolitics. Markets. One thing which you interestingly mentioned was the markets were relaxed on geopolitics post victory by Mr. Trump. But as the escalations happened even before Mr. Trump takes office, that was something surprising, which markets had not factored in. And on the data front, UK inflation shot up 2.3% in October against 1.7% in September. Proposals in the recent budget are also inflationary in nature, which has reduced the probability of a rate cut by the Bank of England. Even in Canada, inflation was higher. In the US, the BLS data showed that after adjusting for the hurricane job losses, job market continued to remain weaker. Though all of this did not trigger any moves since geopolitics had already taken the center stage. For currencies, dollar index holds just below 107 and the euro is holding above 1.05 against the dollar despite the situation in Ukraine. And for rupee, we are not seeing any much of a reaction to swings in dollar index. There is some slowdown in FII outflows, which may reduce some pressure on the rupee. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.